China and America are a dysfunctional, codependent couple in a mutually destructive relationship. Stephen Roach, Yale professor and former chairman of Morgan Stanley, sees it that way. Stephen is here today in the studio to discuss his new book, Unbalanced, the Codependency of America and China. Stephen, thanks for joining us today.
Thank you, David. It's a pleasure.
Why is this relationship so dysfunctional?
Well, both economies came together out of need, late 70s and early 80s, relied on each other for goods in the case of the hard-strapped American consumer, and for demand in the case of culturally revolution-impaired China. And they took those hints into unsustainable growth trajectories that have left them very unbalanced and on the brink of perhaps a precarious end to their economic success. And they've got to figure out a new way to grow.
And why precarious? What's
America has a shortfall of saving, a huge current account deficit, has funded current consumption out of asset bubbles and credit bubbles, which ended pretty poorly in the Great Crisis. China's got a warped macro structure, 80% of its GDP exports and investment, 35% consumption, rising debt, excess resource consumption, environmental degradation, mounting income inequalities, none of which are sustainable either.
Well, let's look at the two countries separately. First of all, the United States. Is the United States doing enough to rebalance its economy?
No, we're not. We want to go back to the well and do it the old way, which is stimulating private consumption, this time through quantitative easing because we run out of basis points to do it with monetary policy. And that, I think, is a recipe for future problems down the road. And
China?
China, I think it's safe to say at this point, is in the early stages of a fundamental shift. Whether it was the 12th five-year plan or the third plenum, China's embraced both strategy and reforms to shift more of its growth into consumer demand. And the first signs of that are showing up in the form of a services sector, which has now emerged finally as the largest sector in the Chinese economy. Early stages, tentative progress, but firm commitment, and I think China's on the way to a more rebalanced and sustainable economy.
I mean, wouldn't some people say you've got this precisely the wrong way around? America is roaring back to life with shale gas, and there's more exports, and the economy is looking quite healthy. China, people think, actually the state model is running out of steam, and you may even have a debt crisis brewing.
Well, I think there is a view, David, that America is back. The IMF now bills America as the engine of the global economy. Let the record say that the IMF has been overly optimistic for 5 of the last 5 years. Maybe this year they've got it right. The main problem in America, though, is the consumer, which has been on a 6-year growth path of about 1.25% a year, still has too much debt, not enough saving, and is really unable to support and sustain the economy. Again, shale will not change that. China, sure, there's been a lot of debt. There's concerns over shadow banking and property bubbles, but in the broad scheme of things, China's debt to GDP ratio is well below that of the global average. So is its shadow banking assets, and property is underpinned a lot by the most phenomenal urbanization the world has ever seen. So China, yes, not hardly problem-free, but I think on the road to a more sustainable macro structure.
So China moving in the right direction, the United States not yet.
Stuck. The U.S. is stuck. But that raises the biggest problem of all. America needs external saving to keep growing. Its largest source of external saving has been China, who is now moving to saving absorption to support its own people rather than the American people. What's America do without this large external source of funding other than have to pay higher a price in the form of higher interest rates, a weaker dollar, or higher inflation to get the job done?
Stephen Roach, thank you very much.
Thank you, David.